If you look at the news recently, they are very dramatic.
Like you say, rocket goes up, oil prices goes up.
What exactly is happening in the markets right now?
It is a very, very good pause to the conflict.
Is gold broken?
That's $1 million question. How exactly it will end?
Good morning or good evening, depending when you're watching this. I'm Andrew and this is OCBC Wealth in Focus. My guest today is Head Wealth Advisory OCBC Malaysia, Michael. Thanks for joining us.
Hey, Andrew.
Before we begin, Michael, would you tell us a little bit about what Wealth Advisory is and what is your role?
Right. Well, the advisory team in OCBC is actually what we do is that we will always be looking to provide clients with the outlook as well as the analysis of certain situations that will affect clients' investments. So, for example, this morning we had a ceasefire news in the Middle East. Clients will be reading the news and wondering, how should I take this news in terms of how I manage my investments? So in that sense, we will then be able to, we will look at the news, we will analyze it, and we will look at our own house views, and then we will provide the advisory to the clients as to what to do with their investments. How should they be rebalancing their portfolio? Should they be doing anything? Right? What would be the impact, the long-term impact to their investment performance? That's why OCBC always continues to walk beside our client when it comes to investments.
If you look at the news recently, they are very dramatic. Rocket goes up, market comes down. It looks exactly like a movie, except nobody knows how it will end. So Michael, can you tell us what exactly is happening in the markets right now?
Hey, Andrew. That's $1 million question. How exactly it will end? I think at this point, it is a very, very good pause to the conflict. The 2-week ceasefire will allow both parties to come to the table, and hopefully they can arrive at a more permanent conclusion to what's happening in the Middle East. Like you say, rocket goes up, oil prices goes up, right? Trump says we will intensify, oil prices goes up further. Iran escalates, closes the Straits of Hormuz. Again, oil prices goes up higher. So all of these do have long-term implications, especially when oil prices is above 100. The last time this happened was in 2022. So 2022 was also something that investors will remember, right? Because it was a year where a lot of the assets return were negative. Hence, we will continue to guide our customers. Of course, the situation is obviously very fluid at this point. It's very difficult to have a conclusion, but we will always want investors to stay invested because history tells us geopolitics, they don't last. Investments are always driven by fundamentals. So for that fact, I think we will definitely have to go through the analysis based on our outlook, and then we will obviously continuously guide our investors because it is a very, very challenging time for the market and the investors today.
Help me and those watching simplify this. If we were to ignore the noise, what are the 2-3 things that we should actually look at right now?
Good question. Albeit it's very difficult, but investors really should not be forced into making decisions about their long-term investments because these are going to affect your child's education, it's going to affect your retirement, right? So staying invested really is the first thing you do. Not be forced into taking actions like panic selling, right? Or making decisions that really are not shaped by long-term fundamentals, right? We all know that oil prices has spiked up to 100 in history before. It has always happened. But they do not have a long-term impact onto investments. By and large, geopolitical events are very short-term in nature. Hence, this is actually more of an opportunity for investors who are looking to deploy cash. This is a great time to do that.
When we talk about short-term in nature, how short are we talking about?
Anything between 6 months to a year, even 2 years is short-term. We always tell investors for you to be looking at the investments, your investment horizon should be maybe 3 to 5 years. Usually, all of this geopolitical crisis tends to last 3-6 months. If everyone remembers, Russian-Ukraine crisis happened in 2022. Before that, you have the Iraq war, before that you have 9/11, before that you have global financial crisis. We have lived through all of this. So it is important to have the discipline to look long term and to deploy cash in a very disciplined manner.
All right, I've got some questions from the internet, which is always a reliable place. Question number one, why is gold not going up when there is a war? Which sounds very logical, right, Michael? War happens, uncertainty, and then suddenly everybody is feeling a lot more comfortable holding a shiny rock. But when we look at recent prices, that is not happening. So is gold broken, or are we misunderstanding this?
Well, gold is not broken. I can take you back to 2025. We had a worry about the US dollar debt, government debt. There was a US government shutdown, so investors lost confidence in the dollar. And over the course of 2025, gold did exceptionally well. Exception. Investors who have been invested in gold in 2025 must be very, very happy. Right? The current profit-taking episodes where gold prices has seen a bit of selling pressure, it's just coincided with the fact that there is a Iranian conflict now. The other driving force of gold is really about central banks diversifying their balance sheet. Just like investors, they need to diversify their portfolio using gold. Central banks also have always used US treasuries in the past. But because of the loss in confidence in the dollar, they are now starting to diversify into gold as well. So the structural buying for gold actually started way back in 2025. If investors have been following the news, after a price correction, some of the central banks have started to buy gold again. So it is not broken. It just so happened that it was a very strong performance, and hence the profit-taking activity came in.
Question number two, I invested, markets didn't go up. So what now, Michael?
What price you bought gold at?
5,500.
Well, I think jokes aside, I think it's a very good question, right? I think I want to rephrase that. Investors buying into the market should not be looking at prices 2 days later, 2 weeks later, 3 months later. Right? Because that is what traders do. Traders tries to trade the market, buy in at one and then sell very quickly to make a profit. Investors really shouldn't be doing that. You should be looking at time in the market. So staying invested is a very, very important value to have. And once you decide to deploy cash because you believe the assets are the right price, the fundamentals are right, you will then wait for the investment to compound.
So how much time are we looking at, Michael?
Well, I mean, a very good example, right? God bless the man. He's also one of my heroes, Warren Buffett. He has actually accumulated shares in very good companies, and he didn't do it over days or months. He did it over years. So he's not going to worry about what happened of the prices tomorrow. Did I buy at the cheapest price? He's going to say, is this the right asset? Is this the right price? Is this something that is going to compound for me over time? And you can see his investment performance over a long period. He has outperformed the S&P 500. But if you look at the shorter term, I'm sure there will be pockets or windows where he has not done so well.
Last question. Michael, if I'm an investor and I invest in the market today, tomorrow the market comes down, did I make a mistake?
I think it's a very normal feeling for investors, right? They always look at the prices, whether I bought at the low. I think it's really a lot more to do with perspective. If you're investing for the long term, for your child's education, for your retirement, whatever the price you paid today need not be lower than the price tomorrow, right? You are not looking to buy the low. As I said previously, we are not traders, we are investors. One of the strategies that worried investors can use, or new investors can use, is to diversify your entry point over a 6 months period or a 12 months period. This way, you know that if prices were to be lower tomorrow, you have another chance to buy. So this is really a much better strategy. Buy over a 6 or 12 months period.
All right, thanks for joining us, Michael. Let me just summarize this. Number one, headlines can be loud, but not always important. Number two, markets don't wait for us to feel comfortable.
That is true.
And lastly, investing passively is still better than timing the market.
Absolutely.
Michael, once again, thanks for joining us. For those watching, this is OCBC Wealth in Focus.
Thanks for having me.